What's going on, YouTube? It's your boy Bitcoin Lunatic, and today we back with another video. Flipping $500 to $5,000. As you can see on the top left corner, this is a live account. This is not a screenshot. As you can see right here, this is a live account. So today I'm going to go over the trade I took yesterday and the trade that I took today. There's going to be a separate video. I'm basically trying to catch up. I haven't been recording, so I apologize for that. So this is basically based off the trade I took today. So we're going to take all that off. And this right here is the trade I took yesterday. So we're going to focus on this today. So I believe I made, well, no. I made $301.44. Risking $50 on this trade right here. It was a 6-1. So I'm basically about to break down what I did to take this trade right here. So this was around New York sessions. Like I said, I will be trading New York session this whole series. So this is New York session. We have London's low right here. And as we can see, we took out London's low. And we did a C2 sweep. A C2 sweep is when the second candle breaks the low of the first candle and closes back into the range or above it. And that's what it did very handsomely on the 15-minute chart. So this trading strategy is very simple. Once that occurs, I draw a line for the next 15-minute candle, which was 8:15. I go down to the 2-minute chart because the 2-minute and the 1-minute is compatible with the 15-minute, in my opinion. So I go down to the 2-minute chart, and basically when that new 15-minute candle opens, I want to see a change in state of delivery. So you may ask, like, what is a change in state of delivery? What is that? What do you want to see? What do you mean by that? I simply want to see a set of down close candles occur when this candle opens, and then I want to see price break and close above those set of down close candles on the 2-minute time frame, and that will give me enough reasoning to press buy. So as you can see, we have down close candles, break, and close above it. So we're basically changing the state of delivery from selling to buying. The state of delivery have changed. Now we are going to deliver buys. Deliver buys for what? Buys to do what? We're delivering buys to take out, oh my God, buy side liquidity. Buy side liquidity is that simple. When that's changing state of delivery changes, if it's changing from bullish to bearish, we're now, changing the state of delivery from bullish to bearish. Now we're pumping out sales to take out sell side liquidity. You know what I'm saying? But in this case, we're changing to bullish, pumping out buys to take out buy side liquidity. And that's simply what happens. So once it broke and closed, you enter at the close. You get what I'm saying? So you enter right here. When this breaks and closes above these set of down closed candles, that basically you can expect for this low to hold. Meaning, like, you can expect for that low to not be broken. So you can put your stop loss at that low. Right? I know a lot of people like to aim for 2-to-1s, whatever the case may be. But let's say we target this buy side liquidity right here. I believe I targeted right here. It's somewhere in this area because it was a 6-to-1, a 6.77-to-1. So I got out like in this area right here. But as you can see, we could have targeted this buy side liquidity right here, held the trade for a couple more minutes, and we could have made a 8-to-1. You know what I'm saying? So I only risked $50 on this trade, and I made $301. But if I would have held it till this area of liquidity, it would have been an 8-to-1. Meaning I would have made 50 times 8. You know what I'm saying? Which is a very, very, very decent trade size. And this is a 2-minute chart, so the trade started at 8:26. And like I said, I hopped out in this area, so 9:04. But if I would have held 9:24, which is 20 more minutes, I would have had an 8-to-1. But it's all good though. We not trying to, catch, you know what I'm saying, every, you know what I'm saying. But that is a logical area to get out at. I honestly don't know why I didn't aim for that area. I just got out at this area right here. Trade took about 8:26 to 9:14. Let's say like 45 minutes, 50 minutes, 45 minutes to pan out. That's not bad. That's not bad at all. And price actually went way past this area, as you can see. Kept going up, but we're not trying to be greedy. We're just trying to make our money and get out. You know what I'm saying? So that's really all my strategy consists of. Like, it's that simple. Like I said, I did place another trade today. Well, my first trade today that I placed, I made some money, but I'm not going to record that video. I'm going to record that video, but it's going to be a separate video from this video. Each trade is going to be separate. You know what I'm saying? Basically, each video going to be a separate video. I'm not going to collab this video with the other. This is going to be a whole separate video. So basically, this is what it was, man. Like, it was that simple. It was that simple. I seen the opportunity and I took it. I seen we ran London lows. We took our London high and we ran London lows. And my overall bias was bullish. Look at this. Just look. We bullish. We still got to take out this right here. This buy side liquidity above this big old void right here. You know what I'm saying? This big old gap. So we still got to fill this gap. So I was bullish until we filled the gap, or until we took out this buy side liquidity. So my bias was bullish. So when my bias is bullish and I'm trading New York, I simply want to see London lows broke. I simply want to see, accumulation, manipulation, and distribution. Accumulation, manipulation, and distribution. So hold on, somebody calling. My girl calling. Okay, so boom. So if y'all need me to go over it again and make it simple, I basically, if I'm looking for buys, if my bias is bullish, I'm simply looking for price to take out London's low around New York session. And I'm looking for a C2 sweep on the 15-minute chart. Right there. And then on that third candle, I'm looking for a change in state of delivery on the entry time frame, and it's that simple. That simple. London low sweep, C2 sweep. On that third 15-minute candle, I want to see a change in state of delivery. Close above the down close candles. Put your stop loss at the low and shit, ride it out. Till you hit the next area of buy side liquidity. You know what I'm saying? And basically along the way, I got this fair value gap right here because like I was basically marking out price along the way. You know what I'm saying? So just let myself know that it's still bullish. We got this fair value gap it created. You get what I'm saying? We got this order block that it stayed, dancing on or whatever, consolidated on this order block, right? Then we took off, expanded higher, retraced into a fair value gap. You know what I'm saying? Expanded. Came back into this fair value gap before rising higher. You know what I'm saying? So when you're on your entry time frame and you want to trail your stops, you know what I'm saying? You could just trail it based off of market structure. So price comes, let's say price comes to this area and it's taking off. Shit. Put your stop loss under that fair value gap. You know what I'm saying? Price consolidates on top of this order blocks and then it takes off. Put your stop loss under this low. Create that fair value gap. Came into that fair value gap. It's taking off. It broke this high. Put your stop loss under this low. You know what I'm saying? Came up. It did create multiple fair value gaps, but let me tell you the trick to this. How we got 1, 2, 3 fair value gaps or 3 gaps, right? And you see that it do this wick and it made a swing high. Expect for price to come under equilibrium of the price swing. So you take the body of this candle and the body of this swing low and the body of this swing high, and you draw it out and you get equilibrium of the price swing. Expect for price to come into a fair value gap or order block under equilibrium. So this fair value gap is under equilibrium. This order block is under equilibrium. So you can expect for price to come down to that area before continuing higher. As you can see, that's exactly what it did. It literally came right to the body of that order block before taking off and continuing higher. You know what I'm saying? So you can, once it pings it, comes up, didn't break no high, pings it, comes up, it broke this high right here. So when it breaks that high, you can move your stop loss to this low. You know what I'm saying? It's like you could just keep going. Like if I wanted to, I could have kept going. Came into this fair value gap, took off. Came down all the way down to what? Got this order block right here. You get what I'm saying? Came into the order block. It's a small fair value gap right here. I don't know if y'all can see it, but it's very small. It look like it's not, but it is. Came into that, started taking off, right? Broke these highs right here. Once it break these highs, it broke it right here. Broke one of them. You can move your stop loss. Move your stop loss right here. You know what I'm saying? Eventually, you're going to get stopped out, but, like, this is a way to look at it. Like, this is how you trail your stop loss, the correct way to really maximize your profits in the trade. You know what I'm saying? So, this is the trade that I took. This is basically exactly what I did step by step. You know what I'm saying? I hope this was helpful. As far as my bias, some of you all are probably like, how was you bullish? Like, what made you be bullish? What made me be bullish was on a 4-hour chart. We came and we swept this low. Now, when you swing lows and swing highs on a higher time frame, like a 4-hour or a daily, in my opinion, I feel like price is going to reverse. So first of all, you got this big old gap right here. That gap gonna have to be, that's a new week opening gap. So the week just opened up, we already got a gap, and we at sell side liquidity on a higher time frame, an hour for a swing low. You know we finna reverse. You know we finna reverse and fill in this gap and take out that buy side liquidity. So my bias was bullish because we took out that sell side liquidity, and we had created a new week opening gap. So in my mind, I'm like, okay, we got to fill in this gap because everything has to be even. You know what I'm saying? Everything has to be even. Now, everything has to be fair. You know what I'm saying? So filling in this gap is fair. You know what I'm saying? Equal is equal. Now everything is equal. So boom, we got that 4-hour. We got that 4-hour liquidity area. And from there, it was on. You know what I'm saying? Like, from there, it was on like Donkey Kong, boy. And then I believe that this area was a fair value gap on the 1-hour. You know what I'm saying? It didn't quite come into it. But I wasn't looking. I was looking for it to come into it before it did the C2 sweep, but not really. If the C2 sweep happens before it comes into it, and we broke London low, that's all I really care about. You know what I'm saying? Because that's my strategy. Because we already took out sell side liquidity right here on the hour 4 chart. So we already took out this liquidity, and we, broke these highs right here, came up, consolidated, expanded higher, consolidated, took out, look, AMD accumulation. It did hella manipulation. It manipulated to the upside. It manipulated to the downside. Accumulation, manipulation, distribution. You always want to get in on the distribution side. This is the algorithm distributing buys into the chart. So you always want to get in when it's distributing. You don't want to get in on the accumulation. You want to get in on the manipulation, if anything, because the manipulation is where you're going to get your best entry at. And then you enter in the manipulation phase, which is right here. I enter in the manipulation phase, and I got in with reasoning on the lower time frame, and I was able to catch me a nice trade. And if you look at this trade from right here to right there, you know what I'm saying? That's about an hour, bro. And it's like, this is just a 8-to-1. But as you can see, price went way above. Like, look at that. Look at that. And it would have never, if I would have kept my stop loss right here and just held the trade and would have been ignorant, like, I'm finna go outside, I'm finna go to the park, come back later, bro, I would have made a 32-1. You know what I'm saying? Which is crazy. But the key to this game is, I feel like if you have a way to take advantage of your profits, do so. You know what I'm saying? Trail those stops, take advantage of your profits. But more to less, the key is to just make consistent profits. Get your consistent 2-to-1s, your consistent 3-to-1s, your consistent 5-to-1s, whatever you're aiming for, and just knock that down consistently. And then you can go from there. You know what I'm saying? So it's your boy Bitcoin Lunatic. Hopefully this video was very insightful. I'm basically doing this series because I want to help people. I feel like when this series is completed and it's dropped on my YouTube channel, I feel like it will help a lot of people, because I honestly feel like if you don't know nothing about trading and you watch this series of me flipping $500 to $5K, I feel like it would give you a lot of insight on trading technical analysis, trading psychology, and risk management. I feel like it will help you on how to think, the correct lot sizes to take based off account size, time frame correlation, higher time frame and lower time frame correlation, trend, you know what I'm saying, or should I say market phases, you know what I'm saying? Because the market phase, to me, it was a reversal in my opinion, because on the higher time frame we came to sell side liquidity. We took out that liquidity and we reversed because it was going down. It was a reversal and filled in a new week opening gap. So this basically was a reversal trade that reversed and ended up trending bullish. You know what I'm saying? So you have your market phases, your reverses, your retracements, and your consolidation and your expansions. So this series is going to help a lot of people because this is going to be a very insightful series, and that's what I made it for. I want people to learn from this. I want someone who doesn't know anything about trading to be able to just sit down and watch this series and have a better insight on what to do and what to expect from the markets and how to think and how to be and how to move and how to trade. You know what I'm saying? I want everybody to be some good traders. You know what I'm saying? So, and this is completely free. You know, like, no one is paying me to do this. You know what I'm saying? I'm doing this because I want to. And because I love teaching, but I would rather teach like this. I would rather drop a video and you go watch it versus me sitting down with you or on the phone with you trying to show you what to do and all that. I'd rather just create videos, you know what I'm saying? So with that being said, it's your boy Bitcoin Lunatic, and we are out.